Hi, Justin. Thank you very much for joining us today. How are things in Southern California?
Things are really nice right now, actually. It's just gorgeous here. Yeah. How are you doing?
Fantastic. Thank you. So, Justin, we got a lot to discuss in a short period of time, but before we get into it, why don't we just start with your newsletter, Uranium Insider? Give us a little bit of background on it.
Sure. We're the only investing newsletter that focuses exclusively on uranium. Been doing it since August of 2019. Our returns so far north of 500% for the whole portfolio. What we do is we provide a deep macro fundamental newsletter once a month. We do monthly members only webinars. We do one of those a month. That's a 2-hour deep dive into the sector for members only. And we also send out intra-month bulletins for trade alerts, macro moving fundamental alerts. And of course, you get all of our stock picks and the companies in the space where we have not only investments in companies, but also intelligently structured options trades as well. And I have a small dedicated team of professionals behind me. So it's been a wonderful experience so far, and we're looking forward to the coming years with it.
Justin, when we last spoke just over a month ago, I believe it was the day before the Russian invasion, and I was asking you why the uranium price was floundering. I believe at the time it was flat on the year, and here we are a month later, and uranium's up 30% on the year. And a big part of this move is on the back of the uncertainty of the uranium supply, and more specifically, the enriched uranium, which comes from Russia. And as a reminder to our viewers, 43% of all enriched uranium globally comes out of Russia. But why don't we just start here? First of all, tell us what the difference is between uranium and enriched uranium and why this is so important to the global markets.
Sure. Enriched uranium is just about the last, besides fabrication of actual fuel rods that go into the reactors, it's just about the last step in the fuel cycle. The fuel cycle takes anywhere from 12 to 24 months, depending on where the uranium is mined, but it comes out of the ground, goes through minimal processing, turning it into U3O8, uranium octoxide, or also known as yellow cake. That's the dry powder that is then converted into a gas at a conversion facility. That's UF6, and the UF6 is sent to an enrichment facility where it's spun in high-powered centrifuges that separates the isotopes to a certain level of enrichment. It then goes on to be fabricated fuel, and again, that does take 12 to 24 months, which is one reason why the commodity moves so slowly. So enrichment is sort of almost the last step in that process, and the reason it's so important is that a lot of times that utilities sourcing uranium and sourcing fuel for their reactors will skip those first couple of steps in the process, and they'll end up having to pay up for it, but they can get that needed fuel faster. And so when you have a disruption to enrichment, it has pretty severe implications for disrupting the entire fuel cycle because it is sort of that last step. And interestingly enough, to your point that Russia provides 43% of global enrichment, they're also north of 40% of global conversion. And conversion doesn't get as much attention because it's a smaller allocation in terms of percentage of the total cost of the fuel cycle for a utility. It's somewhere around 10% of the cost between all of the elements, but it's the tightest pinch point in the entire fuel cycle. And a big reason for that is the ConverDyn Metropolis plant in the United States went offline in 2018. We saw a big jump in conversion in UF6 at that time, and it stayed relatively high. Well, we've seen another 50% jump in the cost of conversion in the past 3 weeks. And all elements of that fuel cycle are actually in a strong uptrend right now.
And just remind us, so Russia supplies 43% of the enriched uranium to the world, but what percent of that goes to the US, or what percent of the US's enriched uranium comes from Russia?
I believe it's somewhere around 20%.
So it's a meaningful number.
It's a meaningful number, yes. With the US being the largest producer of nuclear energy and the largest consumer of uranium, it's definitely meaningful.
And just continuing on with the element of uncertainty of the supply of enriched uranium, Senator Barrasso from Wyoming is pushing for sanctions against Russian uranium. Maybe you can just give us your thoughts on this. Do you think it carries any weight?
It's hard to say. Yeah, Senator Barrasso has been an unabashed advocate of nuclear energy, and of course in Wyoming, it's probably the most friendly jurisdiction in the United States in terms of uranium production. There's producing companies there currently, and a number of development companies. Barrasso introduced a Senate bill to ban the importing of Russian uranium just altogether. So that would need to not only pass the Senate, which has a chance, it would also then have to pass the House and then get the president's signature. Not holding my breath for all of that. The reason is there's implications for the actual stability of the grid if we entirely just cut off all deliveries coming from Russia right now. Now, the largest nuclear utility in the States, Constellation, used to be Exelon. They are actually in support of sanctioning Russian uranium, interestingly enough. However, it's very likely that there's at least one or two relatively large utilities in the States that possibly have near-term or mid-term delivery expectations coming from Russia, and an all-out sanction to cut those off would potentially actually harm the stability of the grid in the States. With that said, President Biden did sign an executive order banning any future purchases of any elements of uranium coming from Russia. So my interpretation of that as of now is that sanctions have not yet come to pass for the United States. Will they? I'm not really sure, but as of now, Russian uranium is not sanctioned. So existing contracts, existing deliveries can still be honored, but any further purchases of Russian uranium, signing of contracts is over from the United States at this point.
So if Russia supplies 43% of enriched uranium, where does the other 57% come from?
Oh, there's a number of enrichers. There's an enrichment facility in New Mexico in the United States. There's a number of enrichers in the EU. There's some enrichment facilities in China. I believe there's one in Kazakhstan as well. So there's a decent amount of enrichment out there, but Russia obviously is the biggest single player.
So let's move on to the ETF flows. And with this move that we've seen in uranium, it's up 30% on the year, give or take. And I know you follow the ETF flows very well. Why don't you just give us an overview, because I just want to get a sense of how much money has flown into the sector here just this month alone and also in the past year.
Yeah, it's been really big in terms of ETF flows. The flows continue to come into the sector. We've seen just this year alone almost 600 million in mandated buying coming from the ETFs due to those inflows. We now have a combined assets under management of URA and URNM of almost $3 billion. And that AUM, just as an interesting note, was less than 200 million during the March 2020 lows. So it's absolutely exploded. And as I noted, I believe in our previous talk, and I note on my podcast pretty frequently, that we've been watching flows continue to come into the ETFs, even during the pullback in the sector, December and January. So money continues to pile into these things, and it seems like, considering all of those flows, I would honestly have expected the sector to have moved more. It looks like there's a decent amount of consistent selling that's meeting these flows. So somebody is adding into the ETFs consistently. Not somebody, it's obviously more than one entity. But in my opinion, I believe that quote unquote smart money is positioning into these ETFs, and retail is adding some selling pressure, kind of capping that movement. It's just this general sort of risk off environment. I think that retail sort of potentially believes that uranium is not going to do what we just saw nickel do, what we've seen oil do, and that the commodities are going to spike and come back down. I think that nothing could be further from the truth. I think we're on the cusp of a really, really big move here, and all of the elements of the fuel cycle moving up are pointing in that direction.
So I just want to reiterate one point. You said in March of 2020, both ETFs had an AUM of 200 million?
Combined between URA and URNM.
And now it's over 3 billion?
Correct.
Well, I wish you told me to buy in March of 2020.
Yeah, that was a buy anything moment, really. I mean, so many sectors have moved strongly since that point, but it's just wild to highlight the moves from there. Yeah, I mean, some of the individual stocks have done 20, 25x since that point too.
I want to move the discussion toward valuation now. Even though uranium's had a big move towards $60 a pound, many stocks have put in nice moves, also up 20, 30% or more. But a lot of them are still trading at discounts to their NAVs. I guess with the one exception being Cameco, I believe, depending on whose research you look at, it's trading maybe around 1.5 times NAV. But do you think we're going to see another run in the stocks given this move we've seen in uranium, or do you think they're fairly priced at this level?
I mean, if the spot price of uranium doesn't move, which I actually don't expect, I don't think we're going to see a whole lot of upside in the equities here. It seems like the equities are not discounting the potential for the spot price to move up more and drastically, which is what I believe is going to happen. Just putting all of these elements together, I think that uranium is ripe for a strong move, and the equities will move again at that point. Valuations are tricky in the space because so few companies, have ever or will ever produce any, meaningful cash flow, if any at all. So it's very difficult to judge valuations based on that, but it's still a very small space. We're still looking at less than 70 publicly traded companies, and most of these companies do at least have small allocations into the ETFs. And really, the flow of funds, if a fund wants to, I think that the SPUT vehicle will be sort of the darling of the investment flows. But if a larger fund wants to take a position in the equities, it's essentially going to be into the ETFs due to liquidity. And so, those ETFs then buy their underlying holdings and everything moves. So I think honestly, the price of the equities is a screaming buy here relative to the spot price. It's bottomed out. It's made a double bottom. If you were to look at a chart of URA relative to U.UN and actually look at the equities relative to the spot price of uranium, it's made a double bottom here, and it's yet to really move. And there's major upside with the equities, in my opinion.
And I just want to focus in on one point that you just mentioned. You said there are only 70 publicly traded uranium companies in the world?
Correct.
And what's the entire market cap of those 70?
Oh, it's less than 45 billion here.
Right. So, and remind us again, how does this compare to the last cycle? I just want to get a sense of where we can go here.
It seems honestly to be moving faster than the previous cycle at this current moment, and that seems kind of ironic for anybody who's been in this sector for a number of years. It seems like things move just slow as molasses, but we had an absolute gold rush into uranium companies in the previous run, where we went from a couple dozen companies in 2004 to almost 500 in 2008. I mean, it was just an absolute rush into the space, and we aren't seeing that yet. We've seen a dozen companies pop up in the last 2 years, so it is happening, but we're not seeing that fervor and that frenzy come into the space yet. So that's different. But that also means that of the equities that are still in existence currently, the upside potential is probably greater, because there's literally just not very many companies you can invest in. So when funds really flow into the space, these stocks can really move violently.
And why don't you think we're seeing the move that we saw back in the last cycle?
That's a really good question. Honestly, I think some of it has to do with where the broad market is relative to the previous cycle. We had pretty strong moves in the broad market leading up into the recession that happened in 2007, 2008. And so the commodities moved with the broad market going up. Now we're seeing kind of like a choppy broad market over the past few months. In just the global tensions that are happening right now, not only the Russian invasion of Ukraine, but just kind of geopolitical tensions across the board. High inflation, rising inflation. I mean, there's so many other macro factors that are affecting the space right now. So in general, it seems like there's a bit of a risk-off feeling overall affecting most markets.
So I have one more question before we wrap it up. As I mentioned on the onset, uranium is up 30% in a short period of time, and that's all on the back of geopolitics. But with such strong fundamentals coming out of the sector, Cameco announced long-term contracts of $40 million at the beginning of the year. That compares to $30 million in all of 2000, or 30 million pounds in all of 2021. France approving the construction of 6 additional nuclear reactors with the possibility for 8 more. And we have a big build out going on in China. Why isn't the price of uranium higher? Why isn't it at $75 or $100 a pound?
The price of uranium, for the most part, moves on actual physical demand for the product. There's no real futures market for uranium, so you're not going to see a geopolitical event necessarily move the commodity unless that equals buying around the commodity. So, for example, with the Kazakhstan unrest in January, we saw a jump up in the spot price because there was activity in the spot market. There were traders. They were purchasing uranium, thinking that they could see some disruption to Kazatomprom's production. So when these events actually trigger buying in the market, then we see the commodity move. So because there's no futures market, essentially, that's why the price doesn't really react to news. The price reacts to physical buying. And so primarily in the spot market, that's been coming from the institutions. That's been coming from SPUT for the most part, which is being, fed by institutional money. SPUT has raised $600 million this year alone. They purchased 11.5 million pounds since the beginning of the year. We're not even 3 months in. And so the market and the investors in the market, generally speaking, watch the spot price. So we have all of these other elements of the fuel cycle moving up, but the investors in the market, unless they understand the implications of that, don't really react to that. And so then you have kind of hot retail money that comes in on the sanctions, the sanctions news or the speculation, I should say. And so if we don't see the actual sanctions come in, there's probably going to be some money that's going to leave the market. And I think that's kind of what we saw today, because there was news about sanctions and uranium and oil and all that was left off of it. But this executive order banning future purchasing is having an effect, and we can see across the fuel cycle, including U3O8, it's in a strong uptrend. And so it's just a matter of time before investors broadly believe, okay, this is real, this is happening, and that's when I think money is going to pour into the sector.
And that's a very good point, but just a follow-up question. If we get some sort of resolution in between Russia and the Ukraine, do you suspect we would get a pullback?
Yeah, probably. I think we'll probably see a pullback, but I think it'll be short-lived, because I don't believe that, well, first of all, I do hope that there is a resolution and it's peaceful and it's soon. But with that said, I don't really think that we're going back to how things were in January. I just don't think, the geopolitical shift that this situation has caused, I believe is going to stick. And so it's unlikely that the utilities in the West, in the EU and in the United States, are going to just rush back into purchasing from Russia. I think that there's plenty of risk to that jurisdiction that will remain so going forward. So I don't expect the commodity itself and the fuel cycle to react necessarily strongly to that resolution that hopefully will come soon. So yeah, I honestly think this is a much bigger deal geopolitically. I think it has legs. I think it's a fundamental shift to how a number of different countries are going to be dealing with each other in terms of commodities trading. I don't think that's going away.
Justin, thank you for making time today. That was a great update on what's happening in the uranium sector, and there's always such great insights coming out of you. I would remind all of our viewers to check out Justin's newsletter, Uranium Insider. There is a link below in the description. Also check out his YouTube channel, Uranium Insider. He provides a daily update on what's happening in the sector. Once again, Justin, thank you.
My pleasure. Thanks for having me.